Here's a financial fact most people don't realize. The average American spends more than $25 a week on things they don't even remember buying: snacks, data plans, small subscriptions, random purchases that disappear in a day. But that same $25, if redirected into the right investment every single week, can grow into a portfolio large enough to pay you $5,000 every month in passive income. This isn't a theory. It's the same system used by thousands of long-term investors who started small and ended up building portfolios worth hundreds of thousands of dollars simply by being consistent. And today, I'm going to break down the exact path, step by step, that shows how someone starting with just $25 a week can slowly and steadily build a dividend machine that eventually turns into a full-time paycheck. No hype, no tricks, and no unrealistic promises. Just real numbers, real growth, and a proven strategy backed by decades of market history. So let's start with the key idea: consistency beats intensity. Most people think you need thousands of dollars before you start investing, but the truth is the opposite. Wealth rarely comes from big one-time investments. It comes from regular contributions that never stop. $25 a week may not look like a lot today, but when you keep feeding that amount into a strong, reliable dividend-paying index fund or company, compound interest turns it into a powerful wealth machine. Let's talk about how this grows. If you invest $25 a week consistently into a good S&P 500 index fund, something like Vanguard's VO, Schwab's SCHD, or Fidelity FXAIX, your money grows automatically through two things: the rising value of the companies and the dividends they pay you. Historically, the stock market has returned about 8 to 10% per year over long periods. That's not guesswork, it's decades of history speaking. And dividend-focused funds also give you small cash payments every quarter, which you reinvest back into buying more shares. At first, your account grows slowly. The first year, you invest about $1,300 total. After a few years, maybe you have only a few $1,000s. And this is where most people quit, because they don't see massive progress yet. But this is also the point where compound interest begins to wake up. By the time you're investing consistently over 10, 15, 20 years, your money doesn't grow in a straight line anymore. It starts exploding upward. That same small contribution builds into tens of thousands, then hundreds of thousands, and eventually it can cross $500,000 if you remain consistent and let compound interest do what it does best. Now, here's the part most people don't understand: dividends become a second income stream. Once your portfolio grows to around $500,000 and it's invested in a dividend-yielding asset averaging around 4% annually, that portfolio alone is capable of paying you around $20,000 a year completely passively. That's over $1,600 every month without selling anything. And if you combine this with strategic dividend reinvestment, tax-advantaged accounts like a Roth IRA, and long-term compounding, your portfolio can push itself far beyond the $500,000 mark. But that's just the baseline. Remember, $5,000 per month means $60,000 a year in passive income. To generate that, you need around a 4% dividend yield on a $1.5 million portfolio. And you might wonder, how does $25 a week multiply into that? Well, here's where time and discipline do the heavy lifting. If you start at $25 a week and gradually increase your weekly investment over the years, maybe raising it to $40 a week when your income improves, or $50 when life gets easier, you build momentum. This steady increase, combined with reinvested dividends, is how ordinary people transform small beginnings into massive results. Think of it this way: every dollar you invest becomes an employee that works for you forever. As you add more employees, your financial engine gets stronger. And because dividends are paid from company profits, you're tapping into the earning power of hundreds of businesses at once. You don't need to manage them, you don't need to monitor them every day, and you definitely don't need trading skills. You just need patience. Now let's walk through the psychological part, because mindset determines your results. Most people underestimate how fast money grows because they only look at what they see today. They don't see the hidden compounding happening under the surface. If you can train yourself to think long-term, to treat investing like brushing your teeth, something you do without thinking. Your future self will thank you more than you can imagine. You also need the discipline to invest even when it feels boring. Even when the market drops. Even when the news is shouting, "Crash!" The biggest wealth in history was built during downturns, because investors kept buying consistently while everything was on sale. If you stay consistent with your $25 a week through every season, good markets, bad markets, sideways markets, you are positioning yourself far ahead of the average person who stops, panics, or gets distracted. Let's talk about what to invest in. There are a few powerful, beginner-friendly options. Dividend index funds like SCHD, VYM, and DGRO give you stability, growth, and regular payouts. Broad market funds like VOO, FXAIX, or SPY let you own the full strength of America's biggest companies: Apple, Microsoft, Google, Amazon, Johnson & Johnson. All inside one investment. And for those who want higher monthly payouts, you can consider covered call ETFs like JEPI or JPQ, which offer higher yields but still carry strong companies behind the scenes. You don't need to pick individual stocks. You don't need to analyze earnings reports. You don't need to learn complicated strategies. The beauty of dividend investing is that time does most of the work for you. Now let's put it all together practically. At $25 a week, that's around $100 a month. Keep doing that monthly, reinvest every dividend, avoid impulsive selling, and let compound interest stretch itself over years. Over time, increase your contribution when you can. Maybe one day you jump to $40 a week, then $60, then $100. This ladder effect accelerates your growth massively. Imagine 10 years from now, seeing a portfolio worth $35,000. 20 years from now, seeing six figures. 30 years from now, seeing your account push past the $1 million mark and entering that stage where your dividends alone produce $4,000 to $5,000 every single month. And the crazy part is, you don't have to do anything special. Just be consistent. This is how ordinary people retire early. This is how people escape paycheck to paycheck life. This is how you buy freedom, not with luck, not with complicated strategies, but with time and discipline. So if you're watching this right now and you feel like you're starting too small or too late, don't worry. $25 a week looks small today, but it holds enormous power when you stick with it. Many millionaires started with less than what you have now. The real difference wasn't their income, it was their consistency. And that's the message I want you to walk away with. Start now, stay consistent, automate your investments, reinvest your dividends, and give compound interest enough time to transform your future. Because one day, that small $25 habit can turn into a portfolio big enough to pay you thousands every single month, for the rest of your life.